As you plan for the expenses you're going to have in retirement, don't forget about taxes. As at any stage of life, whether you owe federal income taxes depends on how much overall taxable income you have in retirement. Joining me is Mike Milligan with Ideas by Mike LLC in Norfolk, Virginia. So Mike, thank you for joining us. Explain the difference between tax prep and tax planning.
So tax prep is basically recording history. It is taking what's happened in the past, putting it on a document that then shared with the IRS, that then you will pay either a bill or get a refund. Tax planning is totally different. It's looking at where you currently stand and where taxes are heading in the future. See, taxes are historically low right now, Scott, and we know that that may continue for a time period, but spending is out of control in the United States also, and our debt is running rampant. There's only two avenues our government has to get that spending, that deficit, and that debt under control. They can either spend less, which we don't think they're going to do, or they can raise revenue, and that comes in the form of taxes.
So nobody likes RMDs or required minimum distributions. How can someone offset taxation on RMDs?
So we have some unique strategies to help with RMD planning. You know, with the Secure Act 2.0, you're actually able to defer some of that accumulated savings up to $200,000 to age 85 now. And most advisors, first of all, don't know it and then don't know how to execute it. Number two is if you make charitable contributions, we should be making those contributions to satisfy your RMDs as qualified charitable distributions. Number three is we could do Roth conversions. Roth conversions is paying the tax now so that you never have to pay it again. And it is a great strategy to reduce future RMDs. And then fourth, what most people don't realize is RMDs can be used as a potential long-term care expense that then make it tax-free through the tax code and using the medical exemptions. So we like to show people how RMDs can be used, but one of the things that we do is we show them a one-of-a-kind plan that helps them execute a proper RMD strategy.
Now talk about the backdoor Roth strategy for people with higher incomes.
So the backdoor Roth strategy can be used one of two ways. It could be through a Roth IRA. It's where you actually make a contribution to a traditional IRA that is non-deductible on your taxes, and then you convert it. The other way is to do it through your employer-sponsored plan. We call this the mega backdoor Roth because the limits are much higher. You know, in 2025, that's going to be $31,000 if you're over 50 years old. That's how you get more into tax-deferred, future tax-free income by paying taxes while they're on sale today.
Mike, how are Social Security benefits taxed?
Well, you know that we've heard the candidates talk about this specifically, but in the current world and under our current laws, you know, Social Security is taxed based off of the other income you have in retirement. The higher amount of the Social Security you receive is taxed. It's taxed just like ordinary income for most retirees. Now, there are strategies to be able to help in the future to make some of that Social Security less taxable by reducing where you get income from other sources. And those are things we talk about in the one-of-a-kind financial planning process.
That's Mike Milligan with Ideas by Mike LLC in Norfolk, Virginia. Thanks for watching Retirement News Online.